Hello, it's Robert Miner with Dynamic Traders Group with our Saturday YouTube trade strategy and chart example update. I'm going to take a look at the ES very briefly, only about 4 or 5 minutes at the most. We're at a critical crossroads with the ES. If you watch the video from last week, you know that we're anticipating that more than likely around this high a couple weeks ago made at least a weekly top. I'm not going to discuss the possible Elliott wave count until or unless we make a weekly close below the prior week's close, not last week's, but the week prior to that at 28.74.75. If we make that, then the wave count I'm showing here will be taken off these question marks, and I'll be able to explain it to you at that time. But let's wait until that happens before we take a look at it. What we want to look at is immediately what's going to happen, or maybe what's going to happen next week. The key factor on the weekly data is 2 weeks ago, the ES, as well as the other stock indexes, the YM and the NQ are the two others that we look at closely every week, made dual look-back momentum bear reversals. And that's usually followed by at least 3 to 5 weeks sideways to down whenever we, on any time frame when we make a dual look-back bear reversal. And indeed, the market's been sideways for the 2 weeks, not really down, but as of the end of this past week sideways, but the momentum is still bearish and it's just coming off the overbought zone, so we should have at least another 2 to 3 weeks sideways to down. Not guaranteed, but that's the technical position of the market on the weekly data at least. So we're at a real critical juncture because, let me go to the daily data, is as of this past Friday, we're at about the maximum where we ought to be on a corrective rally. If this is a wave 1 or A, and that's a wave 2 or B. And it's gone a little bit further on the upside than anticipated, but and it was anticipated, we have a 3 to 5 day rally this past week, which should be a correction because the weekly momentums are bearish. So it's a correction within a probable weekly bear market. What's happened though, as of Friday, the daily momentums have reached overbought. And Friday, the range narrowed. It was just up for about 1 point on the day, but we're in a position to at least be warned that a daily high is nearly complete, if not complete, on Friday. And when we have a daily momentum make a bear reversal while the weekly momentum is bearish, that's a dual time frame bearish setup to continue the bear trend. So that's our warning this coming week, is that we have a potential of completing or confirming, I should say, a probable weekly high made at the end of August. So that's what I want you to be aware of. But here's what's important. Regardless of the technical position of a market, whether it's multiple time frame momentum, our price, our pattern based on Elliott wave, whatever, is once a market's in an extreme position for a possible reversal, then we have to identify what can the market do to signal that that reversal is complete. So we looked at the weekly data, and the weekly signal would be a close below the close 2 weeks ago. This is the daily data. And if we look at the daily data, and if we make a close below 28.8850, that's a daily close below 28.8850, is that will confirm not only the daily high, but any daily high should coincide with a continuation of the weekly bear trend. So that's what we're looking at next week, is not an immediate short position, but following a close below 28.8850, we would be in a dual time frame momentum as well as a pattern position to continue the bear trend. Now, this isn't a forecast that that's going to happen. This is a strategy, is recognizing the extremes in the technical position for a probable reversal of higher time frames, identifying what the market must do to signal that that reversal has been made, and we're just in the beginning stages of a higher time frame trend. In this case, it'd be bear trend. So if it happens, then that's your action trigger, so to speak. And even if the ES had traded above the August 29th high early next week and then came down and closed below this, it would still be an indication that a weekly bear trend is going to continue. So keep that on your alerts for early next week, and I think you'll find if this occurs, we're going to pretty consistently continue a bear trend, and we'll follow up on this next week on our YouTube channel here. And again, if this occurs, then in next week or so, I'll go through what I believe is the longer term or excuse me, pattern position of the stock indexes, and that could be quite informative and end up being quite dramatic in the weeks or months ahead. So that's it for today. I hope you like what you learn on our YouTube channels, and I hope if you do, you'll check us out at dynamictraders.com and our DT reports for futures and stock traders as well as Euro Forex traders. Take care.